again. We're live at the Zone in Rosebank, Johannesburg, talking about our economy, its woes, and what we can do to turn it around. Now, retailers in South Africa are under serious pressure. We hear that all too often. FNB's Consumer Confidence Index says consumer spending has been hampered by weak income growth, high unemployment, and the increased costs of living. You've got large retailers such as Woolworths, Massmart and ShopRite. They've also posted less than stellar results. So do South Africans have enough money to shop? With me is economist Sam Rowland to talk about that. Good morning to you.
Yeah, thanks for having me.
Do we have the money? If we do, where's it coming from?
Well, I mean, it's easy to see why the consumer is feeling the pinch. I mean, we are faced with a barrage of bad news. Record high unemployment, threats of a looming downgrade, and threats of a global recession that is certainly putting consumer confidence right back to the sort of dark days of the great financial crisis, that kind of thing. Where is the consumption coming from? Well, typically you find in situations like this, and we've seen retail sales have been quite strong lately in the second quarter. Consumers will stop spending on things like cars, on durables like appliances, furniture, and onto the sort of non-durables, food. They're using it to spend on food and that kind of thing. And we've been a little bit lucky since July. We've had a bit more of an accommodative monetary policy environment. So we're not creating extra income. We're just sort of the conditions are a little bit easier for consumers, and we've been a bit lucky.
And it's important, isn't it? Because it represents 60% of the GDP, so we really need to get people to spend.
Yeah, certainly. I mean, if you think of just the linkages in the economy, retail typically creates very, very good jobs. The spending remains in the economy as opposed to buying on things like appliances and cars, which we typically import. But it's not to say that the consumer is out of the woods. I think we're a bit lucky at the moment. Inflation is at one of its lowest levels. I know to pick up. And it is going to give us perhaps room for an interest rate cut in the next meeting. I don't think we're going to see 50 basis points or something as extreme as that, but it will give us the room to create consumer spending. And I think we're going to need it because we know that the dark clouds are gathering in the global economy. There is signs of a looming global recession that's being bandied about. And if this were to occur, well, we're going to need to rely on consumer spending. We can't rely on investment coming from abroad, unfortunately, which is where it's needed. So we are going to have to rely on consumer spending.
And business confidence at its lowest in 2 decades.
Yeah. Well,
that doesn't help, does it?
I think policy uncertainty is not helping at all. And many hoped, and we had the Ramaphosa phase, if you remember, where they said, well, Ramaphosa is going to come in with a series of sweeping reforms, and business did get on board with that, but it's just happened too slowly. And the woes of the SOEs, the stability of Eskom. Businesses aren't going to invest, and especially businesses abroad, which we desperately need, are not going to invest in the country if they can't guarantee their production. So,
and who's going to benefit from this time, do you think? What's going to step in and get the rods rolling?
If we look at the sectors that are doing very well, things like agriculture, our exports in certain commodities are doing very, very well. Those kind of things, we're going to have to rely on the export market for the time being, it's difficult. When we're faced with things like Brexit, it's hard to see the silver lining, but perhaps with a no-deal Brexit, it might create space for South African companies to create favourable deals between us and the UK or between us and the EU that might benefit us. But
and for the consumer at the moment, I mean, the message, sit tight?
Well, the difficulty is, if we saw how the consumer approach to debt was over the past couple of years, we saw consumers were taking a conservative approach. They were paying off their debts, paying off their loans, not taking out as much, and it was sort of putting us in a recovery phase, which wasn't great for our spending, but it was also a bit better for consumer health. However, now lending, and especially unsecured lending, has started to rise again. This is very concerning because income growth, as you said, isn't occurring, but consumers are starting to borrow more, and especially worrying is it's a lot of unsecured lending, and we find that the worry is that if companies that provide unsecured lending start to put the brakes on it, we're going to see perhaps a credit crisis of our own in the country.
You say dark clouds are looming. How should business and consumers prepare for that?
Well, it's certainly tricky, given that we often rely on the global economy for our demand. I think what is critical in times like this, and unfortunately the space isn't there, but to get investment going. We've heard the rumours in the private sector that business is sitting on a pile of cash. They were reluctant to invest in the Zoom administration, and what we need to see is companies that do have excess cash available to invest in, new output, expanding, because the danger is, well, as we know, machines break down. If companies don't invest, they lose how much they could potentially produce. And the worry is that when the economy picks up again, the businesses are inefficient, they're not sort of ready to take on an uptick in demand. So businesses need to keep investing and creating jobs where possible, because this will stimulate on its own, and hopefully this will be enough to carry us through however long a recession, if it is to occur.
Simon, thank you very much.
Sure, thank you.